What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Garrett Blair and his partner in business. I was going to say in crime. I don't even want to imply that. So whatever. So Garrett, how you doing today?
Doing well. Just out here, nice day in Long Beach. Thanks for having us on your podcast.
Awesome. And you want to introduce your partner as well?
Yeah, so this is Matt here. I work for him, and he's been in the commercial real estate space for
about 25 years.
25 years. We work with King's Barn, which is one of the top DST sponsors in the country. I think we've syndicated. We're getting close to $1 billion this year. It's really taken off. So, thanks again for having us.
Awesome. And just so that you know what's going on here, I'm really happy today because my very favorite audience member is joining us today. And why is my favorite audience member here today is because these are Chance Encounters. And this is where I interview commercial real estate investors, syndicators, and operators. And why do I do that? Well, part of it is because it's the law, at least if you're dealing what are called private deals, ones that you can't advertise publicly. And so you need to get to know people in order to do that. So it's kind of the law. But the bigger thing is we're all just looking to see if there's overlap in our businesses. And so we've got this community in this audience here, checking people out, finding out what is it exactly that you do. But before we do that, I need to turn on that, and I need to hit this right here. Boom! I need you to check your 8. For the audience, it's your 5. It's under this thing here. Check for big ugly red buttons, because if you see a big ugly red button, you should really hit it and turn it gray, because it's much better. But let's talk about motivation here. I always talk about motivation first, just because everybody, including newbies, they know why they're getting into commercial real estate, but they don't necessarily know what they're going to do in commercial real estate. You guys are already established, so you got that all buttoned up, but this really tells you an idea of where you are in the business. So the first motivation is preserving purchasing power. That means you've already got a nest egg or a portfolio of assets that are cash flowing. So the only reason why you'd want to make more acquisitions would be to stave off inflation. So if inflation is tearing away at that, you're going to have to make some new acquisitions. But that's not what I'm really up to. My big one is trading time directly for wealth. I'm making strategic partnerships to focus on the deployed equity side instead of focusing on wage. And the reason for that is because I've got a background in tech. I've owned a CRM based agency for 12 years now. And what hit me is like, hey, well, if you're making all this money in wage or salary, then you're paying way more tax than anybody else. So how do I pivot? And that's what brought me to commercial real estate. So that's what I'm up to. Now, some people are making acquisitions, though, because they either want to leave the door open for retirement or they want to get there faster. And, that's perfectly good, makes lots of sense. But these next guys, they're not going to be, shifting down their gears anytime soon because they're so ambitious. They want to buy their entire hometown. And they want to focus on that generational wealth, making sure that their great grandchildren never have to have a day job. And the last group of the bunch, though, they've found some sector of society, or maybe it's animals, the environment, and want to send people to space or whatever it is. But they realize if you want to get that really big impact, you're going to have your financial situation all buttoned up and have a substantial amount of assets. So those are the 5 big motivations. Of those, I don't know if we want to just take turns between the two of you, Garrett. But what's your motivations? Which of these describe you guys best?
You want to start out, Matt?
Yeah. I think for the purposes of this, we're a sort of we're a developer, we're a property owner. We own, operate, manage very aggressively. But really, I think the key thing that we do is we're a DST sponsor. And the candidate that invests with us typically are folks who are done what I call working their real estate. They still want to own and enjoy all the tax shelters and benefits of ownership. They just don't want to be bothered with broken toilets and leaky roofs and stuff like that. So this is really, the DST model is really it's a very safe, passive, boring form of investing. So we kind of mitigate the risk on the way in. We do two things. Number one, we put 50% down on everything that we buy, so we're a very good borrower, and lenders love us because of that. That's a way to eliminate a chunk of market risk. Number two, on the way in, we pre-fund millions of dollars in reserves, and those reserves sit with the lender throughout the life of the investment, so that when there is tenant rollover during ownership, our third-party management lady can go in and pull whatever dollars she needs for TIs, leasing commissions, stuff like that. So for you, as while you're an owner with us, there's no disruption in cash flow when we have tenant rollover. So the way we arrive at those dollar amounts is because we are a developer, we're unique in that we do all the inspections of these properties ourselves. And we also do all the tenant interviews ourselves. And that's how we arrive at the dollar amount that we feel during ownership that we're going to need, or, as there's tenant rollover. So it's really the candidate that invests with us are typically, again, folks heading off into their sunset years. They still want to own, they just don't want to be bothered with management.
Good stuff. So like I got your roles, and we'll get through those individually in a minute. So that's really, really cool. But as far as the actual motivations, like what I'm asking, what's in it for you? Because like if you want to fast track retirement, it means like sure, you'd rather like work hard right now and then set up for the future, or if you've got like some sort of pet project, or maybe you coach a baseball team or something like that, and you want to get them the best stuff. Like who knows what it is? That's what I was looking for as far as motivation. I don't know if you have more to say, or if Garrett, you want to take a stab at it.
Yeah, I think the most part, you nailed it. I mean, we do this to make money, and we make money when we buy the real estate. We make money when we syndicate our equity after we close escrow. And what's exciting about it, it's a 2 to 5 day paycheck versus when you go out and you babysit an escrow for 3, 4, 5 months in the commercial side, and hope it doesn't cancel and then eventually get paid type of thing. With this, there's a lot of money, and it's instead of a 4-month process, it's a 3 to 5 day process with us. Yeah,
that's great as a financier role. Garrett, did you have something more to add or no?
Yeah, definitely. I mean, for me, motivation, we love finding great deals for our clients, and it's a great like 1031 exchange solution for them. Yeah. And then, we make money on it as well, so it's kind of like a win-win. And we really get to leverage Kingsbarn's relationship with brokers across the country and the banks, et cetera, to help find those deals that a lot of these investors wouldn't have access to. It's just it's like a great win-win for everyone. I just think we got a good thing going, and I hope it continues to be successful.
Oh, definitely. And I've met all sorts of people who, that's a perfect fit. So the next thing I want to do, though, is in every single one of these episodes, I make sure that I'm helping you communicate effectively on the subject of commercial real estate. So to do that, I have the Dan Does Deals commercial roll die. You can go to dandoesdeals.com and download yours for free. I don't even ask for your email address, which is the worst idea in marketing history. But the real thing is I want you to be able to print this out, so you can practice how to express what it is that people do in commercial deals. And then I do this to be clear on what Garrett and his company are up to. So let's go through these real quick. Repositioner. That sounds like this is a lot of what you guys do. The repositioner is an acquisitions role. And the first thing that they have to do is they have to underwrite the property, which is a fancy word that means do the math. If you're interacting with a seller, the first thing you need to do is you need to find out, is this property actually even making the amount of money that this seller is claiming it does? Okay. And the other part of being a repositioner, however, is you're thinking, how can I change this property so that it's performing better than it is right now? Okay, what kind of ways can we find upside? And there are a few different ways they can do that. One is by getting better lending from financiers. And it sounds like that's like a lot of your outreach these days, is finding better lenders, having access to better, mortgage terms and things like that. And so that's a really powerful tool as a repositioner. But there are two other things that repositioners are going to be up to. They're going to have an operations team, which is in charge of unclogging toilets and making sure these Benjamins don't end up getting flushed down there. But there's other things to operations as well, such as marketing and automation, which are two things that I've been brought on with some sponsorship teams to help out with, because keeping the vacancy rate low is a very important part of the operations piece. But the next thing is they can get a contractor team to make the place nicer, and then that way the next tenants will be willing to pay more than the previous one, so it's more upside. But if you're like me and you're from the internet, you're also going to need a local. You're going to need somebody nearby who can be there in an hour or two, and that's not going to be me at all. But the repositioner, when they have this deal and this team in hand, and they go to the financier, one question that may come up, and I don't know if you guys are your own sponsor KPs, but I suspect that you are. They're going to ask, who is the KP? If just a Joe off the street decides to take over an apartment complex, there needs to be a KP in there to be eligible for the loan. You have to own a similar asset, even if your name is Elon Musk or Jeff Bezos. If you want to buy the place and get a loan, you need somebody in the fold who owns a similar asset. You also have to have a certain amount of liquidity, and then you have to have a balance sheet of at least the amount of the loan, and then you got a commercial real estate deal. So as far as what you guys are contributing to the deals, what roles do you guys focus on?
Yeah, so we basically do all of the above. Sorry, let's take this real quick. Sorry, guys. So we basically do all the above. We have a professional asset management company that manages all our properties for us. We're not really heavy value add operators. So most of the deals we're buying are going to be stabilized already. But obviously there has to be someone, boots on ground nearby, in case there is tenant rollover, capital expenditures needed to be done, et cetera. But yeah, I mean, we do all the above. We buy the properties with our own funds. So, and, we have internal financing usually. And then, we hire third-party management. And then investors basically can come in after the fact, after we already own it, and then basically buy shares into the deal. It's almost like a REIT, except they're actually a direct owner of properties.
Beautiful, beautiful. I love it. So then the next question has to do with the ideal property. And when commercial investors are talking to each other about their buy box or their ideal property, they're really talking about three main things. The first one's geography. Where is it? Okay, like what state, what county, possibly what neighborhood. Okay, they say location, 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 right? So that's the first thing. Second thing is the size of the deal. Okay, and since we're generally talking about multifamily on this show, that's usually unit count. That's also true in office spaces and retail. But if it's industrial or warehousing, it'll be in square footage. But you need to know the size of the deal because different teams will be handling different sizes. And then the third thing, unfortunately, it's the same word for two different things, which is class. Okay, so they use class to mean, first of all, the condition of the building. In other words, is it old and beat up, or is it up to date and it's not decadent or anything like that, or is it actually luxurious? So that's the first meaning of class. The second meaning of class is to do with the area that the building is located in. So what's the crime rate like? and what's the proximity to school? What are the school districts like for that property? So both of those two, they give it the same ratings as they do in grade school. So it'll be like an A or a B plus or B minus and things like that. So as far as the deals where somebody in the audience has a property in their hand and it's right in your buy box, what are you guys looking for, Garrett?
So all the investors, like I said, we can't do any value add, and all of our investors are, older folks who want something passive and very safe. So our investors really can't take any risk. So we're looking for stuff that's, already stabilized, fully leased Class A properties, in good areas. And, in terms of geography, we own in 28 different states right now. So, we're very open to location, but it can't just be, off in the boonies. And in terms of property type, we own all the food groups, multifamily, grocery anchored retail, industrial. We own a lot of office space and a ton of medical properties. And all of our properties, 90% of the tenant lineup is going to be, institutional, like publicly traded companies that people would recognize.
Yep. Like National Credit
and
tenants.
Yeah, exactly. And just, very good looking properties. I think we've bought and sold, at least a few billion in properties in the past 10 years. So, we're fortunate to have a good track record, and, we're really looking for the cream of the crop deals. They're not going to be the highest yield out there, as if you were to go do a value add project, but, it's very stable, predictable, and safe. So that's what we're generally aiming for.
Excellent. And so I got from your partner, was it Matt? The name isn't written, is it? Yeah, Matt. Okay, cool. Yeah, it eluded me for a moment. But one of my favorite things about commercial real estate is the fact that because there are so many sides to the die, it's multifaceted. Like no one person is going to be doing all of the sides for any really meaningful amount of time. So it means that everybody's going to have their unique talents and the best kind of teams they're going to be on. But it also means that they're uniquely suited to help certain types of people. Me personally, I'm always looking for sponsors and KPs, and that's because of my digital background with my CRM experience and marketing and all that kind of fun stuff. And for that to really work out, for me to really be able to disproportionately help, you have to have some foundations already. So whereas if you're just getting started, like as a first starting repositioner, for example, you're going to need somebody who is willing to do grunt work, work 120 hours a week or something nuts like that. And me, I'm the, sharpen your axe, type. But as far as you guys, Garrett, it sounds like you're that you do like 506c public raises probably, and so you're looking for the passive investors. Is it like particularly the accredited investors? Is it that's accurate or?
Yes. All our properties, you have to be accredited to invest. And, I'd say probably 95% of the investors in our deals are people coming out of 1031 exchanges.
Okay.
Say for example, it's somebody who's in their 60s or 70s. They, own some apartment houses that they, want to sell because they're tired of managing it. At the same time, they don't want to, have to pay the capital gains and lose a bunch of money in taxes, or they don't want to have to trade into something else they're going to have to manage again. So, it's great for people like that who, they don't want to be bothered and they just want to, get a check every month and kind of kick back.
Good stuff. And so, and then sellers, so that means sellers would, if they're looking to you, it'd be stabilized then would be, is what would be worth showing you. Yeah. Okay, cool. And then as far as how to reach out to you, we found each other through LinkedIn. You're putting out some great content on there. I really like your posts, and I'm always on LinkedIn as well. So that's a great place to find me. But what's the best way to reach out to you guys?
LinkedIn is great. My name is Garrett Blair, And, also, more than happy to chat with anyone on the phone. My number is 949-300-5610. And then I'm also, very receptive to my emails. So that's G Blair. So my first initial, last name at kingsbarnca.com.
All right, beautiful. And so then the last thing I have, it has something to do with what I was mentioning earlier. Oh yeah, right. I forgot my my tolerance for risk question and all that excitement. And oh my goodness, we can't mess this because this is too much fun. Fill in this blank, please. There are many popular investment asset classes, but I think blank is too risky. What do you think?
Is this specific to commercial real estate?
It could be anything.
Oh man, I might have to go with the Pokemon cards for this one.
Okay. Yeah. What's so risky about Pokemon cards?
Just a piece of paper.
Yeah, with like ink and stuff, right? It's so that's really awesome. So we got that. Thank you for that. But the only thing I have left then to mention is to you in the audience, which is under my QR code. There might just be an ugly red button, which it's pretty much the bane of existence. It says subscribe on it, and you like if somebody is walking by and they see your screen and they see that red button, they're like, what are they going to think about you? They're like, dude, that guy doesn't even subscribe. But anyway, jokes aside, it has a magical power. It means that YouTube might actually pay for these videos instead of me. And I'm sure you want that for me. But the consequences is totally free, doesn't ask for your email or anything. And it just means that my videos might show up on your list of suggestions. But you can feel free to ignore them. That's totally fine because you've already done me a huge favor by joining me today. Just like Garrett, thank you very much for joining me today. This has been a pleasure.
Of course, yeah. Thanks again for having us.
Awesome, thanks.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.